Alright, it's a very overcast Sunday afternoon, and I'm just going for a ride in my local neighbourhood. Got the camera to the left of the handlebar, so it's just going to pick up houses and things. And why am I filming it? Well, because I am. It's a good neighbourhood. I'm lucky to live in a peaceful place. Well, relatively peaceful. So I thought I'd just enjoy the ride. Now, it is a bit dark, so I'm not sure how this film's going to come out. And it's very blowy. So I've got the noise reduction on. Otherwise, you're just going to pick up all this wind noise. The mirrors, side mirror focus, so I can see what's behind me. Now, going through a local neighbourhood. Interesting. They've all got parks and stuff like this. I mean, these places aren't that old in relative terms. This is Burnside Heights, and it's only 15 to 20 years old, I guess. Okay, around here's not bad, the wind's not too strong. So, it's been an interesting couple of weeks, to say the least. With the budget coming down and people worried about that, worried about their investments and things like that, and the tax changes in the tax rules. I'll give my spin on that. Yes, I'm a tax agent, so I know a little bit about tax rules. No expert, but know enough to get by. It's interesting, the capital gains thing. It's going to be fun time if these laws are passed. In a few years, it's going to be a real fun time for tax agents, especially for capital gains. Now, this is the way I understand it. You've got the old rules where if you held property, shares, investments, whatever, for more than a year, and then you sell them, you have a capital gain, then only half of that's taxable. And then what that does, that half that's taxable goes on top of your other income. So it really depends in what tax bracket you are on. For example, I guess the average person's on, between 45 and 135, and the tax rate there is 30% plus the 2% Medicare levy. So if half of that is taxable, it fits into that bracket. But then capital gains, if it's on, and property is usually a lot more, and it'll push you into the next bracket, over the 30% bracket. Okay. And so on and so forth, Anyway, I don't want to complicate it too much. So the proposed changes are that from the 1st of July 2017, if I got my dates right, the capital gains is going to be indexed. So for all new property, shares, whatever, purchased after budget night, after the budget was handed down, they're going to have indexation on the capital gain. And that's going to be fun. Well, what's going to be more fun is if you had, say you had a property before budget night, then you still get the 50% discount up until then on the new laws come in. So you've got to work out the 50% discount on that. And then after that, any gain is indexed. So I guess they'll have software to cope with all of that. And don't quote me on that, because there's still a lot of confusion about how these games are actually going to work. These laws are actually going to work. And then, so I'm not going to go into a detailed explanation or whatever. There's still a bit to unfold. Anyway, look at this street. It's not bad, nice. There's a creek over there. It's really nice. It's past, you can deviate everywhere. But I'm heading in a certain way. I'm heading to the east, so I want to keep on that trajectory. Anyway, the next thing they're talking about is the 30% tax on trusts. So trusts can be complicated, so again I'll keep it simple. So for example, you have, take a small business that has a trust structure. So before change in legislation, they are able to distribute, if it's a normal family trust, or what they call a discretionary trust. So it's your discretion to distribute to who you want to, and who are the beneficiaries. And the trusts, the way they're set up, they have a broad range of who you can distribute to. You can even distribute to, if you have a small company, you can distribute to them. Anyway, what the proposals do is impose a 30% tax at the source. So the trustee is taxed on the 30% profit before it gets distributed, and then whoever it's distributed to has a minimum 30%. Well, it's been taxed a minimum 30%, and they get the credit for that. That tax that's already been imposed. But see, where that hurts people is when, before the change in law, is when they distribute to people on a low tax rate, or someone who is not on a tax rate. Like, for example, children, when the special rules on passive income for children up until they're 18. So they get heavily taxed up until they're 18 if they get a distribution from a trust. But once they're 18 and they say uni years or whatever, they're not working, there's a big opportunity there for families to distribute income from the small business, and they don't incur any tax up to that tax-free threshold. Well, currently 18,200, but then also there's low-income rebates that push that up. You're somewhere around 22 and a half. I haven't got my calculator sitting on my bike, so anyway, that's going to be knocked out. So it's going to be a minimum 30% tax. So a lot of people aren't happy about that. They don't get that tax break. Well, you say maybe that's not fair. I don't know. Well, see, I keep working in the supermarket. Most of them are still at school. They're not going to earn more than 80,200 or 22 and a half grand anyway, because they're still there at school or uni or whatever. So this is just another way for someone who isn't earning an income. So, whatever you think. Is it fair or not fair? And then the other thing is, you could have a small company as a beneficiary as well. Now, the company tax at the moment is 25%. I mean, it's been a lot more in the past, but it eventually got down to 25%. So, for example, if you had high income earners already in that trust and no one really to distribute to, but you had a small company, then you could distribute to that company at a tax rate of 25%. No Medicare. So that's the thing about that. Now I'm thinking what else impacts people. I think they're the main things. Oh, what am I talking about? Of course, the negative gearing. You know, before negative gearing, and let me explain how negative gearing works. If you've got an investment and what your, say the income you're getting for is less than your costs, whereas say for example you had a house, investment property, you had a big mortgage on it and it's costing you more than the rent you're getting in, that negative part of it, bottom line being in the red, is you are able to offset that against your normal income. And that's negatively geared. I mean, the same would be for shares. If you took out a loan to buy shares, you know, that's working against whatever dividends you're getting from those shares. And if it puts you in a minus situation, then you can apply that to your other income. So, what they're proposing to do now is with property, investment property, you cannot take advantage of that negative situation unless you've bought a new property. So in the housing market, you have to buy something brand new to be able to negatively gear it. So the loan you have on that, and all the other costs, if it's in the red, that means you're minus, you'll be able to offset that against your normal working wages, income. Whereas before it was all properties new or old, but now it will only be new if all these laws are passed. Now, I guess the idea behind that is to stop the investor buying young people who want to buy a house. And look, I'm not either way saying it's good or bad thing. I'm just commenting. But we have experience in my family, and I'm sure a lot of people have experience in their families, where their children are at the stage where they want to buy a house, but everywhere they go, they're being outbid. They're being outbid by, in our experience, by investors, because they've got more money power. I mean, they've been around longer, they've built up capital, and they're able to bid higher. And I'm not putting anything on them, but it's just a situation. And then the young people, it's very hard for them to get in that market. Now, new properties, how quick are they going to be built? It's getting tough for the small builder these days. Very tough to keep up with it. Anyway, I'm still going through my neighbourhood. Well, this is now, we're in St Albans now, so which is a lot older. Been around a long time. So the houses are a bit older. Across the road where the camera's pointing, that's Delahaye. Now Delahay's probably been around 35 years. Around about that. Anyway, let's get back to what I was talking about. Yeah, so that, and I guess that's the thoughts of why the government want to put that in, because there's a big housing crisis, you know, and it's so tough for young people to get into a house unless they've got a really good deposit. Thank you. Anyway, and how, like I said, how quick can a house be built? And then you don't necessarily end up where you want to go, where the kids want to go, you know. So that's my spin on it. Anyway, is there anything else? You got your negative gearing, your capital gains tax. I mean, I did it all in one big whack. The dates are staggered a bit, but now what they're giving you at the moment, this tax time coming up now in July 2026, when you do your tax return, you can have an automatic deduction of $1,000. Now, what that effectively means for most people will be that $1,000 equates to the tax rate, whatever it is. You know, say for example, if you're 30 cents in the dollar, well, it knocks it down. You're getting 300 plus the 2% Medicare effect on that deduction. But you know, a lot of people have over the $1,000, so they'll just do the way they always do their tax. And then there's going to be a rebate of $250, which won't kick in this year, but it will kick in the year after. That's what my understanding is. And that's a big word, as I understand it. My understanding is people say that, well, I'm not really sure, but that's my understanding. I think it kicks in next year. I haven't got my notes and stuff with me. It's a bit hard to read notes when you're on a bike, especially when there's a lot of traffic around. So for a Sunday, everywhere there's a lot of traffic, but it's not bad. Okay, so that's my spin on the whole thing. And why am I talking about this? Just because I am. No reason at all. Because I'm out for a ride on a Sunday and I just want to not make it so boring, as I usually am. But anyway, that's as I go, and I've got no choice but to put my head into these tax changes, because like I said, I'm a tax agent, and that's what we have to do, to get our head around all this stuff. And there is a lot of confusion at the moment, and we'll see what happens anyway, because it's got to go through Parliament. It's got to get approved. I guess the current government has, you know, some good numbers to make these things happen. We'll need support from the minor parties, I guess the Greens, and I won't get any from One Nation, I can tell you that, and not much from the Liberals either. So, and I'm not advocating that I go for any of them. It's whatever. Not